One at a big data infrastructure level, a company called Blue Data, and second, a company at the application level called Reflection that I mentioned earlier very briefly. Blue Data is really bringing virtualization into the Hadoop era. As some of you may know, Hadoop has become very popular as a big data storage mechanism with a programming interface on top of it, but it all started on bare metal. It's almost like pre-virtualization era over a decade back. So even though Hadoop is by itself is getting traction in the market, we did not start it off with a virtualized environment. So that's what Blue Data is trying to achieve, and it is already doing that with some of the top IT shops in the world. That's one of our portfolio companies. The second portfolio company I would like to give an example of is at an application level called Reflection. So today, if you go to Nike.com or Macy's.com, chances are high that Reflection with a K instead of a C, Reflection will be the engine running behind the scenes for you. And this is really ushering in the era of personalization 2.0. And it is at an application level. This is where the big data analytics come alive, and people, end user starts to see the final value of big data. So what you will see will be machine learning and dynamic discounting, and all the items you see will be customized for you real time. So Macy's.com that looks like X to him will be different from what somebody else sees on Macy's.com.
Yeah, I think since we all used a lot of B2B examples, maybe I'll give a consumer example. So, I am an investor in a company called Zirx, Z-I-R-X, which is an on-demand valet company. So if you drive to San Francisco, you can actually punch it in, just like you enter your destination in Waze. You punch in your destination in that app, and when you arrive there, valet is waiting for you, right?
We can use it right now?
Yeah, absolutely.
Oh, okay.
So they, it's very, they're doing tens of thousands of parking every month in San Francisco. But what's really cool is that they capture the user behavior of each individual user, and because they have to deploy valets dynamically, they have figured out what the behavior is. They try to predict. It's kind of like Guru Hariharan's company or companies like Preact and Gainsight. They try to predict what the behavior would be and actually deploy valets even before you're ready to arrive or leave, okay, based on your behavior. So some pretty interesting intelligence there.
Okay, coming to this, the million-dollar question and the gap between the entrepreneurs and the VCs, usually valuations, they seem to be pretty much at all kinds of, they're just a roller coaster right now. So how do you deal with that? And what do you see in the market? Is it really overheated, or is it reasonable? What do you think?
Maybe I'll start. I think for the past 4 or 5 years, what we have seen is a startup gold era, effectively. And because of that,
gold for whom?
Gold for investors, and gold for startup CEOs, founders, the entire team as well. And there are so many examples. You can go on and on, like Uber, etc. But what it has also fueled is high expectations and high valuations. Investors look at this as, oh wow, this will be the next Uber. Every week I see at least 2 pitches labeled in the subject, Uber of X, Uber of Y. That term is just, I don't want to say that's a bad word to say, but that term is just getting beaten to that. The bottom line is valuations have gone high, but at the same time, we do see startups with pretty stellar teams, right skill set, and with a differentiated technology at reasonable valuations, because there's a whole long road to a $1 billion valuation company. Early on, you don't want to just set yourself at very high valuation, because the expectations for your product market growth are going to be sky high.
I think what we're seeing is a story of haves and have-nots. There are companies that, somehow manage to get early traction, whether it's real or false. It's sometimes unknown. A good example of that is Secret, which raised $35 million and just went bankrupt. And what's happening is that the investors are reacting to those, very early traction numbers and showering them with too much money at high valuation in some instances. I think what we're seeing is, in the other end, there are companies that are actually built on a very sound basis and a differentiated basis that are probably taking a little bit longer to mature, but are turning out to be much more enduring companies. So the challenge for investors is, how do you find the latter and try to, be more judicious about the former? It's not that you would not make the bet on the former. There's a higher likelihood that, you may have higher beta in that case. But I think a portfolio that is a mix of both is kind of like what is well advised in this age of gold, or shall I call it a bubble?
I think I agree. Actually, I think there is a segment of companies that package themselves well, and a key part of the packaging is there are about 6-7 VC firms that are essential to that packaging, and this is when people talk about bubble and some of those VCs themselves are alarmed with what's going on. I think that's the dangerous part, and that can drag everybody down. But I would generally agree that if you eliminate those, the rest of them are pretty much okay.
Okay, we have lots and lots of questions, but unfortunately we don't have so much time, so probably the audience can kind of catch up with them later. Just to close this, I would maybe just add one of the questions and a takeaway for the entrepreneurs. And one of the questions is, what opportunity differences do you see with data in developed versus emerging markets? In developed markets versus emerging markets? And if you can give your takeaway for entrepreneurs also, so in the next 2 minutes, we would like to wrap this up then, yeah.
So, I mean, I think the reason I asked is, who is this golden era for? I think this is a golden era of innovation. That's how I think about it. I think there are two major transformations going on. One is this thing, right? Everything moving to mobile. That's got impact on both businesses and consumer behavior. And the second is everything moving to the cloud. And I think I believe we are still at the early stages of that transformation. And there's going to be so many businesses created that are, tens of billions of dollars that will be sitting here 5, 6, 7 years from now and saying, wow, that was a not so obvious opportunity, or perhaps an obvious opportunity. So encourage everybody thinking about, how this and the cloud can be used to innovate, right? That's point number one. I actually think that the emerging markets in many cases are moving much, much faster because they don't have the legacy of devices other than this, and devices moving forward for this, such as a smartwatch. So, I feel that, today I was actually having lunch with an executive from Tencent, and what's going on in China is just fascinating to watch, right? We don't even hear about half of what's happening in the innovation circle here. And I think Guru mentioned in the earlier panel that, it's 10x here, it's 1x here, 10x in India, 20x in China. That's definitely true. So I think emerging markets are a huge opportunity.
I think my simple advice to entrepreneurs is focus on the product and the product market fit. Define your market, whether you're going after the local market, if you're based here or in India or in China or anywhere else. Focus on that product market fit, get the customers, funding will follow. VCs will run after you once you have some of that traction. So that's generic advice I give, but along the lines of the differences between developed and developing countries, I think the opportunity is huge in developing countries just because of the scale. The question comes down to is execution. Ideas are a commodity. I get the same idea from Bangalore and Shanghai and Silicon Valley. Ideas are a commodity. Execution is the differentiation.
Advice to entrepreneurs. I think entrepreneurs get a lot of advice. So, I guess one piece of advice is there is just a lot of exciting new things coming along, and I'm often surprised with how many people are just kind of rehashing sort of old ideas and repackaging them. Look at someone like Google and how they're investing in drones and robots and augmented virtual reality, and there's just so many exciting areas. Looking at yet another lead scoring company and so on. So that's one piece. The second on, I think we have experience in India and Brazil. And just the growth of the middle class creates a lot of opportunities which have been addressed here in some way. And I'll just take one around payments. It's just an incredible opportunity in Brazil.
All right, thank you so much, really appreciate this. And as I mentioned, there's lots of questions there, so the audience would like to kind of go, we can follow this up later also. Thank you.